Good morning. Welcome to Stock Market Today. It's Friday, August 16th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to ChaikinAnalytics.com/today, you can sign up for a free email to follow along with this show, get daily stock ideas for you to consider in your inbox every trading day before the market opens. So major U.S. equity indexes were mixed in Thursday's trading following that big sell-off on Wednesday. The defensive groups, staples, REITs, and utilities led the charge while energy and industrials lagged. Treasuries rallied with the 30-year falling below 2% for the first time ever. The dollar was stronger against the euro and yen. Gold finished up 20 basis points, and WTI crude closed down 1.4%, though off the worst levels of the day. And as we get to the desk this morning, futures are in rally mode, up 90 basis points after Asian markets ended mostly higher. European markets are posting good gains as well. Treasuries are weaker across the curve. The 210 spread is holding in positive territory now following some brief bouts of inversion this week. 30-year bond is back above 2%. Dollar is stronger versus both the yen and euro. Gold is off 70 basis points, and WTI crude is up 1.8% to get us going on a Friday morning. So it was a mixed session. The major markets so far are holding last week's lows. Here's the S&P 500 still trading within that support zone. We have support 2,800 to 2,850, which is about to include the rising 200-day moving average, which is at 27.96. So a bit of a stabilization. The fact that we're holding this zone and haven't undercut last Monday's low is encouraging for a near-term rally, which we are seeing here in the futures this morning. Let's start thinking about where that rally could go. Resistance is in the area between 2,900 and 2,950. The RSI remains below 50, and that's one of the key indicators that we are watching here. Should the market rally but fail to take the RSI back into bullish ranges, that would be a concern. You'd want to sell that rally and start to get a little bit more defensive or bearish in your portfolios. Chaikin money flow is bullish but still declining. So the indicators are sending a little bit of a mixed picture right now, which kind of lines up with the price action that we are seeing in the marketplace. To me, I think we're a little overdone to the downside in the near term. Wouldn't be surprised to see a rally, which is starting today. However, I'm not convinced that we have enough based on the RSI right now to get us above this resistance zone on the initial attempt. Obviously, we'll keep an open mind and watch how things play out and look to our key indicators or in our key themes and relationships, which we will touch on today a little bit later in the show. Talking about our market in a minute now. Stocks turn in a mixed session after Wednesday's big decline. The defensive sectors were the ones that outperformed as investors continue to prefer safe havens, right? Even in an update for the S&P 500, staples, REITs, and utilities at the top of the list. Treasuries continue to rally. 30-year traded under 2% for the first time ever. In a slowing growth world, we want to favor growth. We'll talk about what that means and take a look at it a little bit later in the show. And as we said earlier, futures do point to a higher open here today. Let's take a look at the power bars now, which are a bit of an improvement yesterday, but are all still skewed to the downside. The Dow adds 50 basis points, 9 bears, 1 bull. S&P 500 adds 0.25%, 116 bears, 60 bulls. NASDAQ was down on the day, underperformer, 30 bears, 18 bulls. Small caps underperform once again, 294 bulls, 384 bears. Bonds continue to move higher, up 1.1% on the day, sending yields lower still. Consumer staples were an outperformer. There's your defensive posture, up 1.5% on the day, 3 bulls to 4 bears. According to the Chaikin Power Bar, large cap stocks are more bearish than small cap stocks. Major markets are mixed across the board. Let's take a look at our stock of the day now. Cirrus Logic. It's a semiconductor company, up 29 basis points yesterday to close at 52.65. It has a very bullish rating due to very attractive financial metrics, very strong price volume activity, positive export activity, weak earnings, but remember, the power gauge rating is a roll-up of 20 factors, 5 in each of these 4 categories. Very bullish stock, strong trend, strong industry group type of name we want to consider when the market and model are in gear, and they are. Very bullish stock is met with a stock that's outperforming, very bullish rating rather, met with a stock that's outperforming, deeply oversold while money flow remains bullish. Now, we had a nice pop on earnings, and we're consolidating those gains above support at the $50 level. To me, this is an enticing entry. I think you want to take a look at a name like Cirrus Logic on the long side. And we're going to talk a lot about semiconductors in the show today and the fact that they are holding up. And as long as they're holding up, I think that that is a positive sign for the market. And you want to look for good opportunities. Cirrus presents one. Ticker symbol CRUS. Take a look at it as a bullish idea today. Sector tracker. Let's look at the movement of the major sectors over the last 5 days. Still has that very defensive feel at the top, right? Over the past 5 days, the only sector that's higher is utilities. That's defense, that's lower yields. Staples, near the top of the list, that's defense. Real estate, near the top of the list, that's defense and lower yields. Healthcare rounds out the top 4, that's defense. Tech, discretionary, comms, and industrials are middle of the road, but all negative. Fins, down hard with the drop in rates. Materials giving some back. I've been warming to materials, mostly a function of precious metals, however. Continue to be of that view, but I think you have to be selective within the group. And by this point, for those of you who are longtime listeners to this show, you should know what our view is on energy, and that has not changed. It's bearish. It's been bearish. Energy is in a pronounced downtrend, and I do not see any reason to go bottom fishing in that group. I don't see any reason to go bottom fishing ever. I like to wait for the turns as a trend follower. But in particular, energy just continues to be a group to avoid. Now, we said we were going to chat on semiconductors. Let's do it. Semi-services over the past 6 months has outperformed the S&P 500 by 6.73%. But the power bar is painting a mixed picture. 11 bears to 7 bulls. It's ranked 12 of 21 subsectors. Now, the names you want to avoid in this group, Qualcomm, Marvell, and Cree, all have very bearish shake and power gauge ratings, but there are names that are doing well, right? We just took a look at Cirrus Logic. Take a look at AMAT, which reported last night. Stock's pretty much flat. Take a look at Lam Research. Take a look at Micron, right? There's some quality names out there that set up well within the semis, but it's a bit of a mixed picture, so you do have to be selective. Right? We want to avoid the very bearish stocks. And let's take a look at the group. Here's XSD. The SPDR S&P Semiconductor ETF has a bullish shake and power gauge ETF rating, and this had a strong trend. The key for us, for the market, is this right here, the outperformance. As long as semis continue to outperform, as they have been, that's a positive signal for the market. Now, a lot of the other themes and relationships that we look at are pointing to risk off, which kind of lines up with my view that we could be in a wide trading range for a while. But as long as semis are holding up, I think that we're going to hold the low end of that range. Currently 2,800 to 2,850 on the S&P 500. Money flow is bullish above the rising long-term trend line. So again, you have to be selective, right? We don't want the bearish stocks. We want the bullish stocks within this group. Fund is currently oversold. So again, lining up markets at support, lining up with our thoughts that we're in a trading range, but closer to the lower end of it. Wouldn't be surprised to see a bit of a near-term rally here. Taking a look at what's trending now. Yesterday's S&P 500 gainers and losers, our movers and shakers. Walmart beat and raised, sends the stock higher by 6%. Really the standout in retail, as you'll see, Tapestry down 20%, Gap down 7%. We'll talk about those a little bit. Agilent's earnings beat, sent that stock higher by 6%. NetApp reports their fiscal quarter earnings up nearly 4%. Didn't see any real news on Brown-Forman to sent that one higher, other than the fact that it's part of that consumer staples group. And then FIS, no real news there. Stock up 3.25%. On the loser side of the board, Tapestry, right, down 22% following their earnings announcement. Now, it's kind of an interesting picture. Walmart is a low-end retailer. It's doing well. The retailers that skew towards the middle and higher end are not doing well. What does that tell us? There's information there. Speaks to the slowing growth environment. Cisco, earnings were okay, but it was the guidance and it was their commentary about the environment that sent some concerns through the market about tech spend. I think that's something to keep an eye on. Cisco's a bellwether, and what they have to say about tech spending is really important. Gap down 7%, just kind of caught up in that retail downdraft. CenturyLink, no real news. And then BHGE is Baker Hughes GE. And obviously there was a report out on GE yesterday which called their accounting into question. I mean, it didn't call it into question. It called it a fraud. Baker Hughes, GE is part, it was mentioned within that report. It's a 170-page report. I did not read the entire thing, kind of hit the highlights. So Baker Hughes, GE, BHGE down nearly 6% on word of that report. Let's take a look at it now. Key themes and relationships are what we look at on Fridays. Get a sense of risk on, risk off. How are investors feeling about the market? This one tells you risk off. This is high yield relative to treasuries. We've been talking about it for a while. It's been in a steady downtrend and is now breaking below the late 2018, early 2019 hot lows, below the trend line, below resistance, new resistance forming here. What's interesting to me, and why do we care? Because this ratio is generally positively correlated with the S&P 500. So we have the ratio below the 200-day moving average. Here's the S&P 500, and here's the 63-day, so roughly 1/4 of trading correlation of the ratio to the S&P 500. It's positive. So the breakdown here and the trend lower sends a bit of a cautious signal to the market. A lot of this, though, what I would note is massive treasury strength and not a breakdown in high yield. It's an important distinction. It's a bit nuanced. We're going to continue to watch it. It matters for the market from a risk on, risk off perspective, from a sentiment perspective. But high yield is not breaking down. Treasuries are rallying hard, as we know. In a slowing growth environment, we want to favor growth. Now, you've heard me say that, and it kind of makes sense if you think about it intuitively. What we're looking at here is Russell 3000 growth versus Russell 3000 value, and you can see a nice steady uptrend above the rising 200-day moving average. Briefly went into a consolidation here that's now resolved to the upside. Momentum of this ratio remains in bullish ranges. Notice how it hasn't become oversold since way back here in November 2018. Right, this is that RSI giving a momentum confirmation to the price trend. It remains in place. Notice during the consolidation, it barely got below 50. And the key here, in my opinion, is looking at the copper to gold ratio, because copper is an industrial metal, right, used throughout the economy, and gold is used as a safe haven. So when copper's underperforming gold, which is what we can see here on the lower end of the chart, when copper's underperforming gold, that is a sign that growth is slowing. Globally, it's no surprise at this point. This is a trend that's been in place for nearly a year. But as growth is slowing, we want to favor growth, right? If growth is hard to come by, it makes sense that we would pay a premium for assets that are growing. So we expect to see growth continue to outperform value here. What does that mean for equity investors as you're looking for ideas within your portfolios? I think it makes sense to favor the growth names, right? Look at it. Look at an ETF that's a growth ETF and look for the bullish and very bullish names within that ETF. Semis holding relative support. Now we've kind of beaten this a little bit today, but we'll continue to do so. Holding relative support. This is positive for the market. Above a rising 200-day moving average. We've been in a trend for a while, but what's encouraging to me is that the RSI is holding in bullish ranges, and semis on an absolute basis are holding support as well. So again, this relationship, semis to the S&P 500, is highly correlated to the S&P 500. So if we continue to hold here, we should expect the S&P 500 to hold lower end of the range, which we're doing so far. A breakdown here increases the odds that the market itself will break down, and we want to think about becoming more defensive, more bearish than we already are. But in the meantime, market's at the low end of the range, and we want to favor growth in a slowing growth world. So take a look at a name like Hologic. HOLX is my bullish stock of the day today in Chaikin Analytics. Bullish stock, strong trend, strong industry group, outperforming the market, oversold with bullish money flow above a rising long-term trend line. 1, 2, 3 out of the past 4 earnings announcements have been positive surprises. I think this consolidation here sets up a good opportunity on the long side of the portfolio. That's going to wrap it up. Head over to chaikinanalytics.com/survival-guide for my weekly action plan. I'll see you next week, folks.